So what's up, guys? Today is the 29th of March 2026, and again I'll be taking you through this weekly technical analysis of the 30th of March till the 3rd of April 2026. And again, this week we'll be starting up with the second quarter of the year, and hopefully I'm looking forward to see great chances, great opportunities coming in. The market has started trending. Things are just playing up quite well. The market trends, really trends, but again, it has been having some ranges. But again, in the past few weeks, the market has been trending. And that's what I'm looking forward to see it coming in the first, second week. The first great start, it will be a great start for April, hopefully. And again, also this week. And it's up to us to now align ourselves with all these major areas that are against align ourselves with major entries or again major levels of which we can take advantage of these opportunities despite all these happening in the world, the geopolitics, and again all these sentimentals that are coming in. Last week I talked about it. I said it will be a crazy week. Many probably they got messed up on Monday. And I was very patient on what I would see on Tuesday. I got my entries on Tuesday, and I was able at least to make some opportunities, recover at least 2% of my accounts. And again, what would I say about the first start of the first quarter of 2026? Again, I've lost two challenges, but won one challenge, and I'm still kicking in the fourth challenge. So I'm telling you, march on. Don't be afraid. March on. You only need one strike. Then again, you'll recover everything. And again, you'll be set up for the whole year. So I'm looking forward to see great opportunities happening up again on this start of this week, the start of the second quarter. And again, it starts tomorrow. From tomorrow, tomorrow is the 30th. And again, we'll have 31st, then probably on Tuesday. But again, let's see what is in for the market. Let's stop talking too much. And again, let's see what's waiting for us in this week in the market. And again, hopefully, based on the economic calendar, as usual, we'll get started by having a look at the economic calendar. And I want to use as shortest time as possible in all this. I'll be quick first analyzing this. So be keen and again, be patient and hopefully it will help you. So tomorrow being the 30th, I don't trade on Mondays, but again, we do have very high impact news on the euro. Again, we do have news that are focusing on the German. This will be based on Germany and again the Spain, and all these will be focusing on the CPI. Again, we do have medium impact news on the Austrian dollar, which is one of my pairs of interest, and again the euro out, which is also one of my pairs of interest, is trading the euro. And again, I'm on the pound and again the New Zealand dollar. So all these quite interesting. Tomorrow is a crazy Monday. And again, don't forget, we also have a new chairman who is again probably to come in on the in the US. The first chairman will be changed from Jerome Powell to a new chairman, and it's not yet confirmed, but again, things may change. So what does that mean? We may be looking forward to see a very hawkish dollar, whereby the dollar may seem to be heavily bullish, as we can see it, which we also see it on the technical analysis. But again, forget about that. Still, tomorrow we do have very high impact news on the dollar. As you can see, we have Fed Chairman Jerome Powell making a speech, and again on Tuesday we do have very high impact news on the Australian dollar. And the euro, the pound too. The pound we have medium impact news, and again the euro we have been focusing on this is France, and again Germany, and again the European Union, and all the euro area and the eurozone. All that will be focusing on the inflation rate. Man, you'll be anticipating to see craziness on the euro out, euro New Zealand. This is will be crazy. So again, we'll have very high impact news on the dollar, that is on Tuesday, and again on Wednesday, medium impact news on the Australian dollar, euro. It's gonna be a crazy week for the euro, and this will be the 1st of April. And again on the dollar, we have very high impact news that will be focusing on the US retail sales. And when you look at on Tuesday or Thursday, sorry, we do have very high impact news on the euro, and again on the dollar, continued jobless claims, all that. I don't want to keep on explaining that. You can break it down based on your fundamentals on how you understand all these. Probably it should be a totally whole different thing. Again, on Friday, it's a Good Friday, and most banks will have closed. So we have trading days, that is on Tuesday, Wednesday, Thursday. And Monday, I don't want to trade. I already have running trades, and I'll just be patient to let them flow. So with that, let's get down to the technical analysis. And I want to get started by having a look at the dollar index, and with the dollar index to see where the dollar is likely to be heading to, and where are we trading at now, where we currently trading at now. So last week we were looking forward to see the dollar come all the way to this current area and liquidate itself, and you can see came all the way to this current point. We have this higher low, higher high, higher low. We are trying to break above these higher lower highs and again create new higher highs probably at this current area. And all this journey, you remember, as we have been talking or be analyzing, you are looking forward to see if the dollar can touch the 105 or again break above that and come all the way to the 108. When we look at it on the daily time frame, the dollar yesterday on Friday closed heavily bullish. That day, that was Wednesday, came all the way, created a good higher low, higher high. Then again, good higher low. That was on Tuesday, and now we're looking forward to see these new higher highs being taken out and create new higher highs for the next level. I'm watching to see these prices come all the way to the price of 101 point or 102 or even the price of 103. This current area. That's where you have the major liquidity points. So that's all on the dollar. I'm looking forward to see the condition of the high bullish move. And as you can see, this is a descending channel that I had marked earlier. This was a descending channel that we had talked about last week. Heavy descending channel. The market came all the way, supported itself well. That was on Monday and again Tuesday, supported itself well and again took off. That's what a good move. You can see I was also expecting to see this heavy liquidate itself all the way down here. Then that happened, and now the market has started picking up good support and also a different chart. If you look at it, it's a whole different chart. Go major support level, higher low, high high, and again this is the weekly resistance, weekly support down here. You can see this is 70.6. Looking forward to see this market coming all the way to this current area. The extension levels that are currently here, that is the price of this is the dollar index basket. So based on the FXCM brokerage, and you can see the extension levels are lining again with our major points of interest. That is the price, the Fibonacci level 23.7, area 0.237. And again, if it breaks above that, I'll be looking forward to see this lower highs being taken out, coming all the way to this major point of imbalance that is currently here. So looking forward to see that condition of the bullish move. And again, when I see the last move of these, we have this higher low, higher high, higher low, higher high, broke above this current area, major point of imbalance. Looking forward to see this area, the price of 100 being taken out. And the next level, we can see, as you can see, it's the price of 101. And once it breaks the price of 101, we'll be looking forward to see this price come all the way to the price of 105. This is a descending channel. Whenever I see a descending channel, always the market creates a heavy bullish move. So this is the weekly resistance that is currently here. I don't need to keep on drawing it again and again. This is the weekly support down here, and again the market is tricking out higher low, higher high, higher low. Took out this major point of imbalance, liquidated itself, and again now the market is looking heavily bullish. So first pair of interest that I want to talk about is the Australian dollar. Australian dollar, I've been watching this trade and I've been patiently waiting to see if it would break below this current area. Last week, you were watching to see, you are hopefully waiting to see this market break below this current level. And again, I talked about this based on Monday, and it's quite crazy or quite insane because if you look at it from the weekly time frame, you can see how the market has just formed up a good major weak, heavy bearish move, heavy bearish candlestick. There you go. Again, sorry. This is a weekly support, weekly resistance up there. And again, the market held well, very, very well. And now when I look at it on the daily time frame, when you look at it on the daily time frame here, we have a major point of imbalance that we had talked about earlier. And the market came all the way to this current point, liquidated itself. And now we have confirmed that this is a major lower high, lower low broken, and again these are lower low, and all that I can see or patiently wait to see is if the market will slightly pull back probably around these current areas, and then again you can get a major point of interest or a major point of interest or liquidity itself, then again create some good lower high, then again continue pushing lower. Because for this trade, I'm looking forward to see the continuation of this bearish move all the way to these current areas, hopefully to this 50% or again the 0.8%. If it breaks below the 0.8%, well and good. I'll be patiently waiting to see this market heavily. As if the dollar continues being heavily bullish, I'll be patiently waiting to see this market heavily bearish all the way to this current area. This is the price of this is around the 78.6, around the price of 0.65 or 0.66. So we have a crazy major point of difference that we can wait for the market to liquidate itself. Don't forget, this was a major higher high. So the market may even touch the 1.8, then again turn around. But again, this is always a retracement point. But again, for liquidity, we need to see if this market could come all the way down here. But first areas of interest, so 50%, and again, the strong point, that's close to gain 170 or again 200 pips. So it's up to you on how you can capitalize on that. So the next part of discussion is New Zealand USD. New Zealand USD, as you can see, similar reaction again for this trade. I jumped from this trade instead of USD. USD had already moved, and for this trade, I got a good sniper entry all the way from this current area. And now this is a good move that I'm patiently waiting to see if this market will come all the way down here, and hopefully could it break below that current area. We never know. But I have this trade waiting for it to see if this current trade will come and touch this major level or this major point. This is my 17.6, and I'm waiting for it to liquidate itself all the way to this 17.6 level. And patiently waiting, you can see it has broken below this 1.8%, 50%. This is the major point of interest, resistance. And as you can see here, as you can see there, this current area, this current level, it is a huge major point of imbalance. I don't want to keep on drawing it, but again, it is a major point of interest that I want to see this market touch. We have remaining closer to, and again, 100 pips. So I'm floating closely to, because I got my entries up here. So closely floating to 100 pips. And again, I'm waiting for this trade to come all the way down here. That will be confirming closer to 200 pips. So that's a good trade. And I'm patiently waiting to see if it breaks below this. Well and good. It will be a good sell. Because again, if it breaks below this current area, the 17.6, I'll be waiting to see it create new lows. Because again, these are major lower high, lower low. I'll be waiting to see if this market come all the way below the 0.550. So that will be a good level. And chances are high to see if the dollar continues gaining heavily, then this will be crazy for this trade to come all the way to these extension levels. So that's all for the New Zealand USD. And again, next pair of discussion is euro out, euro out. I'm patiently waiting. We have heavy high impact news that are coming up on the euro this week, and I'm not really sure if, because this market has been heavily bearish, but again, this has been confirmed. These are 78.6 previously. They've been confirming to us that this is a 17.6% Fibonacci level. And whenever I get to see a 17.6 Fibonacci level touch, I always let the market breathe all the way to the 38.2 level. So for this trade now, what did I just do? What did I just do? What did I just do? Oh no, oh no, oh no, oh no. What did I draw? Oh yeah. And I just do. What did I draw the signs? Mm, What just happened? God damn it. So So I don't know what just I just did. You know what I just did? A minute. So again, I was also saying, so we were in euro out now. For euro out, pick first, and again for euro out, as I had said earlier. Now for this one, I've been watching it to see how the market would react from this current. We have been waiting for it from this 17.6 came all the way to this current area. You can see it liquidated itself from this 1.8, had a heavy rejection, and again had a huge turnaround from this current 17.6. And for this trade now, I always let the market breathe from once it touches the 17.6, I always let the market breathe all the way to the 38.2 Fibonacci level. So we need to get there to that current area. If the dollar continues weakening and again the Australian dollar continues gaining, then we'll have chances to see this market coming all the way to this 38.2 Fibonacci level. So I'm patiently waiting to see how the market will react from there. But again, we also have a chance for seeing this market first come to this strong 0.8%. So for tomorrow, again, I would like to wait for the market to probably retest itself or retest this current area, or again the Friday low, because again that Friday low wasn't quite strong. Again, the Friday candlestick wasn't quite strong, came all the way to this current area, major point of imbalance, and again. Could we see the market slightly try to weak out itself, then again gain momentum, again where it would break this current area of my moving average and continue heavily bullish, coming all the way to the 1.7 first levels, and again that's close to 300 pips, come all the way to this 50%, and again all the way to this current area. That would be a good trade that I'm keenly watching to take advantage of. Next part of discussion is Euro New Zealand. For Euro New Zealand, I've been talking about this. I was waiting for last week. We were waiting for it to come all the way from this 1.8. I'm waiting for it to come to this 23.6%. And again, you can see it broke, and I'll be patiently waiting to see some slight pullback. Then again, gain momentum all the way to this current area. If the market continues gaining momentum all the way to this current and break above that current area, then well and good. We'll have a chance of seeing this market come to this 78.6 Fibonacci level, which is currently there, and I'll like just mark it, and then again forget about the current area. We have this current level. There you go. You have the current area, and I would like to just let the market breathe once it's out of the current area. If it breaks above this current 23.6%, then I'll let the market breathe all the way to the current level. So next pair of discussion is gold. Gold, many people are just gambling about it. And for this, I don't have much to talk about because again, I'm still looking forward to see the condition of the bearish move. Again, the dollar is heavily gaining. Then what do we do with this? Can just be patiently waiting to see if this market, how the market will react all the way for that heavy bearish move, and then again continue that heavy, massive bearish move that is currently happening. Again, we have these chances, or we have these levels. Many people continue buying, but again, they're buying an illusion. But for this trade, if you look at it on the weekly time frame, we have this current area, we have this major point of imbalance that had been broken, high, and again, could it break below this current 4,000, and again, probably come to 3,800? Well and good. But again, this huge week says March, and the market could probably slightly pull back heavily. Then again, try gain some momentum. But where will it gain some momentum? We have this huge point of imbalance, and again, we have this huge point of imbalance. So it may slightly break above this and again get liquidated all the way from this current level. And again, you have another chance from this. But for gold, I'm not trading it, and it's up to you to wait for it. If you still trading it and you want sniper entries, trade above this current area, anywhere in between these current levels, then that would be a good point for you to just jump on it for a continuation for the sell-off. So that's all on gold. And again, the next discussion is Euro GBP. Euro GBP, I'm patiently waiting. I've been watching this trade. We have this area. It has reacted from this monthly support. This is the strong pointed Fibonacci level. Again, this is a weekly resistance, weekly support. I'm watching to see this trade, how it will react from this current area. First levels of interest, I want to see it come all the way to this 78.6 Fibonacci level. And again, retest that current area. Once it retests that current level, and again, if it breaks above that current level, then we'll be looking for to see it break above that and come all the way to these extension levels, which is closely from the current area. I'll be watching it to come closer to 150 pips or 160 pips from the current level to this 1.8%. We have close to 100 pips. So that's all. You can see how the market is trading, or currently wherever it's trading. It's at the 38.2, and it's quite slow, but again, it's quite it moves quite strong, and I'm looking forward to see it gain heavily on that momentum. So next pair of discussion is gold, GBP. I've been trading this current prayer, and I've been patiently waiting to see this market heavily bearish, and I would like to see this market continue dumping itself. This is a huge sell-off. Last week it showed a huge momentum, and I got some entry all the way from this current area. This is a huge major point, 17.6 liquidity, the liquidity point, and when I take out this trade this manner, I want to see this market further at the 78.6, and once it touches or breaks below this 78.6, I'm looking forward to see this market melt down all the way to these current levels. This is a huge momentum, or again a good level to see it liquidate itself all the way at it's close to 460 pips. So in March on this, but from the current level also, from this current area, the 1.8 price level, we are close to 250 pips. That's a good mark, and you can capitalize on that. And again, next pair of discussion is the US30. US30 again. Due to the dollar rising, the stocks are heavily dumping. Last week on Friday, we dumped close to, we lost $1 trillion, and the previous week, 3 trillion. It's crazy. So for this, all I can do is just mark again. We have this level strong, 50%. Again, this is an ascending channel. Whenever it's an ascending channel, always the market melts down. And now with all this, I'm waiting for it to come all the way to the 1.8 to the 78.6 Fibonacci level. Again, I want to consume close to 20 minutes. I don't want to waste more extend or use much or talk much about this. Again, if you have any question, hit me up and I'll be ready to expound on that. But again, it's exactly close to 90 minutes, and I'm glad to have finished this live stream, or again this weekly technical analysis. Stay tuned, trade safe, and again we are looking forward to see a great start of our second quarter of the year, and I'm looking forward to win more challenges and make the best out of all these opportunities. Cheers guys, and enjoy your week as you trade. Bye.